U.S. stocks closing decidedly higher on this Fed day. The dollar declined and oil rallies.
But the question is, what'd you miss?
A divided Federal Reserve leaves rates unchanged for now, but signals a 2016 hike is still likely.
Plus, we break down today's decision with former special advisor to the Fed, Andrew Levin, and Deutsche Bank chief international economist, Torsten Slok.
And Citigroup's chief global political analyst, Tina Fordham, joins on what's at stake from the U.S. and German elections.
All right, a straight shot up for the market as we begin our market minutes here in equities. Certainly, when you look at how the major indexes did after the Fed press conference began, it was basically a straight line up, and you now have the major indices closing up with the Dow up more than 150 points, gains of better than 1% for the S&P 500 and the Nasdaq, and in fact the highest for the S&P since September 8th on the heels of the Fed non-decision.
And we'll talk about it more, but everything was up. So not just equities is kind of the mirror image of a couple weeks ago, and around the world, stocks and bonds were selling off. Today, everything is green pretty much across the board.
Yeah, the majors went up for sure, but you can see gains of more than 1% here. We haven't seen that in a couple of days. I wanted to show you what brought up markets around the world. So here in the U.S., energy stocks were the biggest gainers. You can see that sector of the S&P rose more than 2%. Over in Europe, it was the banks, a gain of 2%. In Asia, also the financials that were rising, up more than 2% because of what the Bank of Japan did, and we're going to talk about that throughout this program as well. People are saying they wanted to help out the banks. They were pretty upfront about it. Maybe that's a blueprint for the ECB, maybe even the Fed, but for Europe, it seems more important. I also want to show you some of the winners and losers on the S&P today. We talked about Microsoft. We talked about FedEx in yesterday's program. FedEx took a while after hours yesterday and then shot up today, rallying for a while at over 7%. You can see it closed just about that high. Netflix, on the other hand, higher content costs are concerning investors, so Netflix took a dive today. CarMax also is seeing less traffic in its showrooms, so that's a concern. And then one stock I just wanted to point out is Harley-Davidson. The ticker is HOG. You'll see an oink next to that on your Bloomberg. The stock is up 16% year-to-date, going at least as far back as June. There have been rumors and reports of a possible buyout. Those persisted again today, pushing the stock another 2 or 3% higher.
Let's look at the government bond market, because there were a lot of action here, starting with the Bank of Japan early this morning, and that's really what kicked off the day. This is an intraday chart of the Japanese 10-year yield. You can see yield shooting up to positive territory briefly right after the announcement, then coming down, still ending in negative. The buzzword today is yield curve targeting, and this idea that the Fed wants to, or the BOJ, wants to target that long end. We're going to be talking about this more, but that's the Japanese 10-year right there. Let's look at the Japanese spread, the 210 spread. A lot of talk about the BOJ wanting a steeper spread. And you can see it's really been steepening since July. That allows the financial system to make more money. But it's actually come in a little bit today. So if the BOJ does want a steepener spread, they didn't get that today. It's coming back the last few days. Now let's turn over to the U.S., where, of course, we had plenty of action. Two-year yield ended up unchanged, which is, the two-year yield tends to be sensitive the most to Fed policy. In the end, not much doing, but the 10-year yield declining meaningfully to 1.65. It was actually much higher earlier in the morning after the BOJ up in the 1.7s. So a little bit of a flattening of the curve there. If we look at a 210 spread, again in the U.S., looks very similar to that Bank of Japan chart, steepening in recent weeks, but very recently coming back down to flat again. And so that is sort of the big trend and micro trends of how government bond markets reacted to the central banks today.
And in normal times, we will look at dollar yen and in reaction to any kind of Fed decision. Of course, today was not normal. You had the BOJ and the Fed decision. The yen weakened on the BOJ announcement to shift its policy to the yield curve away from the monetary base. But then you see the yen rebounding. Of course, the chart shows the dollar strengthening, the yen the dollar declining, and of course that has been gradual throughout the day, and the yen rebounding. The yen actually finished firmer versus the dollar in almost all of the major currencies except for the rand. It moved two big numbers against the dollar to a 3-week high. And a couple of standout emerging market currencies as well. The real, this is the popular carry trade. You borrow dollars cheaply and you buy the real to tap into Brazil's high rates. That trade, by the way, has returned 33% this year. The rand is now at a 1-month high. There's speculation that Anheuser-Busch InBev started buying the rand to pay local shareholders for its $100 billion plus acquisition of SAB Miller. And the ruble also getting a lift from higher oil prices. So those are all reflecting declines in the dollar versus the real, the rand, and the ruble.
And a quick look at commodities. I mentioned earlier that everything was green today everywhere you looked, and commodities are no exception. Crude oil having a good day on news that OPEC is going to have an official meeting coming up in Algeria, and the precious metals also doing well. Silver tends to do well during a risk-on exuberance, and so you see silver and gold were up, with silver outperforming the yellow metal.
All right, those are today's market minutes.
Let's get right now to the Fed decision. A divided central bank holding fire for now, but signaling that a rate hike this year is still likely. Yellen saying a pickup in growth and labor gains have strengthened the rate hike case. Significantly, though, 3 FOMC members dissented from the decision today, saying the Fed should move now, and the dot plot shows Fed officials have scaled back their rate hike expectations for 2017. Fed Chair Janet Yellen spoke shortly after the decision was announced.
Economic growth, which was subdued during the first half of the year, appears to have picked up. Household spending continues to be the key source of that growth. This spending has been supported by solid increases in household income, as well as by relatively high levels of consumer sentiment and wealth.
Joining us now is Torsten Slok. He's chief international economist for Deutsche Bank. Torsten, thanks for coming back to the show. Let me ask, first of all, your reaction. Did you think we got exactly what we expected?
Well, I think the major breaking news here is definitely the dissents. For a long time, we've been interpreting all different kinds of Fed speak. Some members have moved in one direction, more in the other direction. But at the end of the day, it's the vote that matters. And now the fact that 3 members, and most importantly...
But didn't we know that? They each had given a speech, at least one speech, some of them 2 or 3, in the past few weeks, sort of indicating that's exactly what was going to happen.
Well, but previously we've had all kinds of speeches where they haven't dissented. So I think the fact that they are now voting with their feet is making a huge difference. And I think that also sets us up, therefore, for what expectations are for the future, because now part of the committee has said, I have been loyal a long way here, but now I actually do feel that it's time to go. And I think this is a very, very important development that we should be paying attention to.
I wonder, though, if we're overinterpreting the significance of the dissents. I mean, at the Bank of England, for instance, dissents are almost expected, right? But it doesn't necessarily change the outcome. Do we expect that as there are more dissents, Chair Yellen will be swayed by the dissents and change her decision?
Well, in some sense, you could also view it. The reason why there's been no dissents up to this point, or very few, generally over the last several years, has been because Yellen and the leadership has been able to convince people not to dissent. So in some sense, the culture of the FOMC is that you don't just dissent just because you feel like it on the day of the FOMC meeting. So the fact that now you are seeing, at the end of a very, very long period of low rates, a group of folks now saying we don't want this anymore, we think rates should be going higher, it is a very, very strong sign that the committee is not being torn apart or being split as such, but it's really telling us in the market that anyone who doubts that the Fed wants to hike rates, now we got very strong evidence that this is indeed where we're going.
Okay, so the market generally is skeptical that non-press conference meetings like November are really live. They always ask about it, and the chair says, yes, of course they're live. And people are also skeptical that the Fed doesn't take politics into account. But Yellen said over and over again, politics plays nothing into this. The election doesn't matter. Markets pricing in a 21% chance of a November rate hike. Should it be higher, given those 3 dissents, as you see these dissents change the outlook?
Absolutely, Joe. I think that the market is underestimating here the likelihood that we could get a hike in November. Because think about it. If 3 members today said we would like to hike now. Why should they wait one meeting and then another meeting? I mean, if they want to go now, the risk is that you will add another fourth member, and then you have a really difficult situation because we just haven't seen such a significant split before. So to your question, absolutely, I do think that the chances of a November hike are higher. That doesn't mean that that's our base case. I still think December is most likely, but I think she was very adamant today about saying the election doesn't matter, it doesn't enter our discussions, and that's a very strong signal that she's trying to say all meetings are live, and she's trying to make sure that if conditions turn in that direction, we could still see a hike in November.
Yeah, I mean, a quick look at FedGo on the Bloomberg shows you that the meeting is November 2nd. It is only a couple of days before the election, and everyone just assumes that that's why they wouldn't move. But why would it matter? Why would it make a difference?
Well, the issue
the election.
She continues to say we're data dependent. You got a good question from Craig Torres about financial stability. She basically said we don't see any overvaluations anywhere. Markets are not frothy or bubbly anywhere, really. So her conclusion is if we do continue still to see non-farm payrolls look good, if the unemployment rate still looks relatively good, if we still see more signs of an upwards trend, both in the Atlanta Fed wage measures, all other measures of wages, and more broadly CPI inflation is definitely trending up where PCE is low. And all that suggests that we can basically check off almost both boxes for the dual mandate, which means that it's time to go.
So you make an argument that especially in light of the three dissents, the center of gravity may be moving in the Fed more hawkish. However, listening to Yellen, she did not strike me as sounding hawkish. She was talking about how the fact that the unemployment rate and various measures of labor market slack and utilization actually haven't improved for a while. She said there was more room to go. We're not there on inflation. Listening to just her, thinking about the press conference, where do you think she is?
Well, I think she's trying to tiptoe around the different views that are on the FOMC. But if you read just the statement, that was actually relatively hawkish. So in that sense, there are some different signals that the markets now have to interpret. Is she trying to say, well, there were different views on the committee, I have to make sure that I represent the different views? Or is it the statement that we should be reading because that is really what the committee has agreed on? And I think the statement is sending a fairly strong signal about, okay, we worry about these risks. They probably worry about everything from Brexit to China to a referendum in Italy. Other things could be a risk. But generally speaking, it sounds like from the fundamental analysis that they feel pretty comfortable about the economy.
All right, we got to get one last question for you on the Bank of Japan. The Bank of Japan, of course, shifting its focus from the monetary base to the yield curve. Now, does the shift increase the chances of the BOJ reaching its inflation target? I mean, it explicitly said it's willing to go past the target, but does that shift do that?
There are some good chances that that could happen, but I think the most interesting thing about that is that Bernanke wrote a number of papers about 10 years ago where he basically listed out what are the different options you have when you are in this situation. And one option that he had on his list, and several people have mentioned, is targeting long-term interest rates, and nobody else has done that. And now Bank of Japan has opened that door and said we want long-term interest rates to be zero, because they don't want long-term interest rates to go up too much, but they don't want it to go down too much because then the yield curve will not be steep enough. So there's a number of issues that go into thinking about whether this will work. So we have just opened a new chapter in unconventional monetary policy, namely the final bullet point, if you will, in the textbook in terms of what are the options for central banks that want to try different things, namely target long-term interest rates. And will it work? It still remains to be seen. Bank of Japan has a mixed history of getting things to work, but so far the market reaction unfortunately hasn't been on their side.
All right, Torsten, thanks so much for joining us. Really appreciate your time on such a busy day. Torsten Slok, a Deutsche Bank chief international economist.
All right, coming up, Andrew Levin, who served as a special advisor to former Fed Chairman Ben Bernanke and, of course, then Vice Chair Janet Yellen from 2010 to 2012, will be joining us to give us his interpretation of what the Fed decided and the importance of the dot plot. This is Bloomberg.
I'm Mark Crumpton. Let's get to First Word News. President Obama is promoting trade and investment between the United States and Africa. The president said progress in Africa is also important to security and prosperity around the world. He made his comments today at the U.S.-Africa Business Forum here in New York City.
Africa is on the move, home to some of the fastest growing economies in the world and a middle class projected to grow to more than 1 billion customers.
The U.S.-Africa Business Forum is co-hosted by Bloomberg Philanthropies, which manages the charitable work of Michael Bloomberg, the founder and majority owner of Bloomberg LP, the parent company of Bloomberg News. Hillary Clinton's communications director says the candidate is preparing for the, quote, different Trumps that could appear at their debate. Jennifer Palmieri told reporters today that Donald Trump could be aggressive or he may lay back. Clinton and Trump meet for their highly anticipated first debate Monday night at Hofstra University here in New York. Palmieri would not reveal who is portraying Trump during debate practice. Mr. Trump says he plans to add 9 additional names to his list of potential Supreme Court nominees. He says he'll expand the list he unveiled in May from 11 to 20 names. The United Nations says it will resume aid convoys within Syria. This after the White House charged that either Russian or Syrian warplanes attacked a humanitarian convoy. 20 people were killed in that attack, which was another damaging blow to an already shaky ceasefire. The Kremlin has denied responsibility. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Scarlet, back to you.
All right. Thank you so much, Mark. A divided Fed left its policy rate unchanged for a 6th straight meeting, saying it would wait for more evidence of progress towards its goals. But it also signaled that an increase is still likely by year end, given the strengthening economy.
Economic growth, which was subdued during the first half of the year, appears to have picked up. Household spending continues to be the key source of that growth. This spending has been supported by solid increases in household income, as well as by relatively high levels of consumer sentiment and wealth.
Let's get some much-needed perspective now from someone who is a special advisor to former Fed President Ben Bernanke and then Vice Chair Janet Yellen. Andrew Levin is a professor at Dartmouth College. He is also the creator of the famed dot plot, and he joins us now from Hanover, New Hampshire. So, Andrew, let's talk about the dot plot here then. We know that the Fed officials lowered their forecast for where interest rates are headed in terms of their increases, and they've also lowered their projections for inflation and GDP. What did you make of what they've assessed? Is it feasible? Because they're still looking for inflation to rise. And my question, I guess, is where is the inflation going to come from if growth is coming down?
Well, I like to think in terms of alternative scenarios. So one scenario is that, which I think they have in mind as their baseline forecast, is that the unemployment rate is going to come down further, wage growth is going to start to pick up more than it has, and that will feed through into core inflation. And over the next year or two, core inflation will head up closer to the 2% target that the Fed wants to achieve. There is an alternative, though, I think it's important to keep in mind, which is that inflation's been around 1.5%, core inflation measures around 1.5% for the last 4 years in a row, even as the unemployment rate's been coming down. And so there's certainly a scenario where that's the picture again next year. I think when you look at the market forecasts, the markets have been thinking all along that the pace of tightening was going to be very, very glacial. And it's increasingly looking like the markets got it right and the Fed was over-optimistic.
Let me ask you about the mood of the Fed and how it works, kind of the mechanics of it. Torsten Slok said that he was surprised that there were 3 dissents, even though we knew that those members had been relatively hawkish in speeches. The fact that they almost dared to dissent was surprising. Chris Rupke from Bank of Tokyo Mitsubishi notes that 8 out of 12 regional presidents voted for an increase in the discount rate in July. He takes that as a sign that there are maybe 8 hawkish votes, maybe even 9 if you count Rosengren. So do you think that it's possible a lot of members withhold dissents for political reasons or out of respect to the chair?
Okay, so keep in mind here that the Federal Reserve Act has a rotating system for the voters. The board members from D.C. get to vote at every meeting. The New York Fed president gets to vote every meeting, and everyone else rotates in and out every 2 or 3 years. So when you're counting the 8 Federal Reserve Bank presidents who recommended discount rates, many of those people are not voters. So the key today was that there were 3 dissents. 3 Federal Reserve Bank presidents dissented from the decision. They all 3 said that they thought the Fed should have hiked today. But I think what's notable is that Chair Yellen succeeded in keeping all the board members from D.C. on her side. Now remember, the board members are the people appointed by the president, confirmed by the Senate. They're the ones who vote every meeting. And she managed to sustain a consensus among those 5, plus the president of the New York Fed, plus one of the other regional Fed presidents. So I think she seemed pleased today. I think it's healthy to have a good debate. Just like the Supreme Court, there are going to be times when it's a close call, and having a 7-3 vote is a good outcome in the sense of demonstrating that there's real debate going on within the Federal Reserve Committee.
All right, Andrew Levin, stay with us because we're going to have more discussion on today's Fed decision. Andrew Levin, of course, former Fed advisor to Ben Bernanke and Janet Yellen. This is Bloomberg.
What'd you miss? We are back now with Andrew Levin, professor at Dartmouth and a special advisor to former Fed Chair Ben Bernanke and then Vice Chair Janet Yellen.
Professor Levin, with 3 members dissenting today and a more divided Fed as a result, what does data dependent now mean versus last year when there was more consensus in what the Fed did? Has the definition changed?
Well, I think that it's clear from Chair Yellen's remarks today that they're heading toward another rate hike. And I think if you look at last year, we went through very much the same sequence. The Fed wants to be careful and considered and deliberate. They don't want to lurch. They don't want to move suddenly. They don't want to take the markets by surprise. So I think what we will very likely see this fall, if there aren't any dramatic changes in the data, is that at the November meeting they won't hike, but they'll issue a much more clear statement like they did last November, saying something along the lines of, at our very next meeting, we'll be carefully considering a rate hike, as they did last year. And that will set up the markets to understand, as we get into late November, early December, that the probability of a rate hike moves up to 60, 70, 80, 90%, so that by the time they actually do the rate hike in December, there's really no surprise. It's baked in the cake.
Professor Levin, of course, the Fed wasn't the only major central bank to go today. The Bank of Japan made a lot of headlines. A few innovations, it seemed, more explicit targeting of the yield curve, explicitly aiming for a rate at the long end, and a more explicit willingness to let inflation overshoot. People often talk about how Japan's economic situation may be the future for central banks and economies in Europe, in the U.S. Has the BOJ charted new territories and monetary tools that at some point the Fed should consider down the road in another easing cycle, perhaps?
Well, I would even say sooner than that I think that exactly the lessons that Governor Brainerd emphasized in her speech 10 days ago was that the lessons from Japan are lessons that are very relevant for the Fed today. The extent to which the U.S. could get into a situation where it has a 2% target, but it's really struggling to push inflation upward, and it's struggling to gain credibility with markets and wage and price setters, and the inflation continues to fall short, year after year after year. I think the Federal Reserve has a clear target now of 2%. Chair Yellen emphasized that they're fully committed to achieving that target. I think that achieving that target could easily mean that they follow a policy where there's some modest overshooting, and I don't think they should be scared of that. That should, and again, that would be certainly foreshadowed by the BOJ, which now is certainly willing to entertain some modest overshooting of its target.
All right, Professor Andrew Levin of Dartmouth and former special advisor to Fed Chair Ben Bernanke and then Vice Chair Janet Yellen, thank you very much for coming on and giving us your insights into this huge day for monetary policy.
All right, a huge day for the Fed in Washington, but going on right now in Washington, Mylan CEO Heather Bresch being grilled by lawmakers from the House Committee on Oversight and Government Reform. Mylan, of course, being criticized for the profits it makes and the high pay of its executives after they repeatedly raised the price on the EpiPen allergy shot. You can watch this on the Bloomberg on Live Go. This is Bloomberg.
I'm Mark Crumpton. Let's get to First Word News. The FBI has released an image of two men who took a suitcase holding a bomb that did not explode in New York City Saturday night. Federal prosecutors have charged Ahmed Khan Rahami with setting a bomb in New Jersey and two in New York City. One of the bombs left in Manhattan did not explode. The men were seen Saturday night removing the bomb from a piece of luggage, then leaving the device behind while taking the suitcase. Investigators have said the two men are being sought as witnesses and not as suspects. House Speaker Paul Ryan says Congress has the votes it needs to override an expected presidential veto of legislation that would let 9/11 victims sue Saudi Arabia. But he acknowledges he has concerns about the measure, saying he worries it will make trial lawyers rich and that will upset a valuable ally, as he puts it, in Saudi Arabia. President Obama opposes the measure. He believes it could leave U.S. officials open to retaliatory lawsuits in foreign courts. It's another sign of how the presidential race has fractured traditional voting blocs. According to a new Bloomberg Politics survey, high-income voters are narrowly supporting Democratic nominee Hillary Clinton. She leads Republican nominee Donald Trump 46% to 42% among voters with household incomes of $100,000 or more. Since 1996, Republicans have always won that demographic. Chicago is hiring more police as the city struggles with an epidemic of violence. Chicago plans to add more than 900 new positions over the next 2 years. Overall, the city has recorded more than 500 homicides this year. That's higher than all of last year. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Scarlet, back to you.
Thanks, Mark. Let's get a recap of today's market action. The Federal Reserve decides to leave interest rates unchanged, but signals it is still willing to raise rates this year. And stocks rallied. You could see the Dow adding 164 points, the S&P adding better than 1%. It was pretty much a straight shot up as Janet Yellen began her news conference. It wasn't just stocks. Bonds also gained. Oil prices rose. The U.S. dollar declined.
All right, hedge fund manager Leon Cooperman has been accused of insider trading by the SEC. Cooperman denies all wrongdoing and defends his buying and selling of shares in Atlas Pipeline Partners. Bloomberg senior markets correspondent Julie Hyman was listening in to the conference call. Julie, who was on the call and what were they saying?
It was just Leon Cooperman, and he was as colorful as always, beginning the call with a joke and then saying the facts simply do not support the government's charge. He said he had a chance to settle with the SEC, but decided not to do so. He says he's going to fight the charges. He says, I'm not going to let these people destroy my legacy. And he kind of went through to some degree his investment in Atlas, saying that his firm began investing in Atlas-related companies all the way back in 2002, and then Atlas itself in 2007. He says in the July in question in 2010 that his firm added 2.2% to existing positions. He says that was not on behalf of him or the partners, but rather outside managed accounts. So in other words, he himself, he says, did not have any money at stake in this at that time, although presumably there would have been fees that would have benefited him that potentially were at stake here. And he says neither Omega nor I sold any shares of Atlas after the announcement that Atlas was going to be selling some assets. That is the insider information that the SEC alleges he had and acted on ahead of time. So again, here he says we didn't profit from it. In fact, we continued buying these shares after the announcement. And he said, in actuality, I'm embarrassed to say the losses were gigantic. He also said they weren't long call options, as the SEC has alleged. Now, he mentioned he wasn't going to take questions on the call, which he said was on the advice of his lawyers, but he was dying to take questions in his words. And he said not taking questions was sort of anathema to his regular style. But again, it was a fairly brief call as he went through these various details and again vowed to fight the charges from the SEC, guys.
All right, Jules, thanks very much. Julie Hyman, Bloomberg senior markets correspondent, reporting on that insider trading case.
What'd you miss? The demographic that has historically supported Republican candidates is now switching gears in a two-way contest. Hillary Clinton beats Donald Trump 46% to 42% among likely voters with annual household incomes of $100,000 or more. Let's bring in Tina Fordham. She is chief global political analyst at Citigroup. So that's certainly one specific group of people. But when you look at the polls overall, they have tightened, which you've noted is typical for this stage of the cycle. Yet you've reduced the odds of a Clinton victory to 60% from 65%. Why is that?
I'm still a little bit nervous about that, but it's also the part in the curve when all political analysts start to freak out about the data. The national polls have tightened. It's quite clear after Labor Day the post-convention bounce is worn off. The developments in the Clinton campaign didn't help. But on the flip side, Trump's numbers didn't improve a lot, right? So I would be careful about making the assumption, as the betting markets seem to have done, that that Trump has got the momentum here. I think a lot, unusually, a lot will ride on that first debate next Monday night. Because Americans don't tend to start looking closely at elections, unlike us sort of wonky types, until after Labor Day and much closer to the time.
A lot of the divides that we're seeing in U.S. politics this year, they're not that new. Everyone's focused on working class whites who support Trump, but they've been drifting away from the Democratic Party for a long time. However, as Scarlet pointed out, people who make a lot of money this year are actually voting for the Republican less than they have in the past. Is this the future of politics in the U.S. and in Europe? Essentially, this very stark divide between cosmopolitans who are doing very well in this economy, who like things like diversity and immigration and trade, and people who don't like cultural change and don't want to see people from other races in their towns and stuff like that. And really, it's just like you're one or the other.
Winners and losers from globalization, right?
More or less, yes. I agree with that characterization. It ends up becoming a question of numbers. But one of the things that I think we have to take away from this year is we've seen this spike in advanced economy political risk between the UK referendum and the rise of Trump, even if he doesn't win, is that election outcomes in developed democracies are a lot less likely, feeling a lot less likely to be mainstream, politically neutral outcomes, right, than maybe at any time in our lifetimes. So markets can no longer count on a result that is neutral.
When you see landslide victories in history, like Ronald Reagan in 1984, do the polls forecast that ahead of the election, or is this something that surprises even the wonky types on election night?
Well, what we've seen is margins narrowing over the last couple of decades. So when we were, it seems like only a short time ago, looking at the last round of elections, remember it was 51-49. With Obama in a slight lead, but a statistical tie. A lot of people said it was too close to call. And in the end, Obama came in with 52%. We're not going back to a time of landslide victories. I think the polarization that Joe talked about is a feature of the landscape. Income is part of it, and education is part of it, but also what I like to quote from the Edelman Trust Barometer about the pace of change. And that's not limited to the have-nots. Even what they call the opinion leaders and professionals feel that the pace of change is too rapid. You hear Joe Stiglitz and others talking about maybe it's time for a pause for globalization.
Is this why we see the collapse of centrist parties even in countries like Germany, where the economy is thriving, or in Austria, where the unemployment rate is like 3%? You can't really cite some economic factor or losing out from globalization. Yet we're seeing the collapse of the center, so to speak.
Globalization or immigration?
Everywhere.
Right.
Immigration is a lightning rod, no question about it. But I think the sort of political science answer to what you said, Joe, is just that the advanced economies still are mainly centrist, but elections are won and lost on fringe issues, culture issues, whatever it might be. But the other point is how much society has changed. You know, after the Great Depression in 1929, there were no social safety nets for people. The need to establish workers' rights and all kinds of other things, and programs for people, unemployment and Medicare, Medicaid, et cetera, has kind of helped narrow the divide between, we're not talking about left and right anymore. Those terms are meaningless. Economic nationalism, though, is something that we see, whether it's in the Trump policy platform, Marine Le Pen, or others, or even the Conservative Party in the UK talking about bailing out industries.
We might not be talking about left versus right anymore, but you still have two major parties in most countries, with the addition now of these third-party candidates that are starting to make their influence felt.
The spoilers.
The spoilers, right. So how do you fold in the candidates like Gary Johnson or Jill Stein here in the U.S.? Do they hurt Clinton more or Trump more?
It is a little bit early to say that, but I think that they hurt Clinton more in the short term. But what it adds to is the great difficulty in forecasting. You know, if you think back again to the last couple of elections, Nate Silvers and the stats guys were the heroes. But Nate Silver said in this election that Donald Trump would never be the nominee. And that's why I think a lot about those cultural, social, economic factors, public health, for example.
I'm curious how much you think the internet is causing this. The fact that there are no more gatekeepers to information. Everyone can have their own set of facts and live in their own filter bubbles. How much does that cause the sort of splintering of political views and hardening of political views into distinct ideologies?
I think it's not causal, but it definitely accelerates. We know that the more Facebook friends you have, the less happy you are. Also, we know that in a time when perhaps not everyone is tuning into Bloomberg or reading
Really?
I know it's shocking, but you know, the sort of print media, you can look at stats that show that people get their information from social media and from other people's, especially people like me. So in the UK, we had a slogan during the Brexit campaign, this country has had enough of experts. And I think that we could say that here as well.
All right. Well, we are not done with our
We
expert.
haven't had enough.
Exactly. Tina Fordham, Citigroup's chief global political analyst, will be sticking with us. We're going to talk about Japan's workforce growth and how women are going to play a huge role in that country's economic prosperity. It's Shinzo Abe's Womenomics. This is Bloomberg. I'm Scarlet Food. It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. Shares of Bed Bath & Beyond are falling in extended trading. This after the company reported second quarter revenue and earnings that fell short of analyst estimates. Comp sales also trailed. Meanwhile, the company reaffirmed its 2017 earnings outlook. Boeing says it has received the green light from the U.S. government to sell jetliners to Iran. They'll be the first in almost 40 years as trade between the two nations thaws following a nuclear pact In a statement, Boeing says it is negotiating terms to provide as many as 109 jetliners to Iran Air. And Facebook CEO Mark Zuckerberg and his wife Priscilla Chan are pledging more than $3 billion over the next decade to work on curing diseases. They plan to work with scientists, doctors, engineers, and universities to achieve their goal. Zuckerberg says, after speaking with experts, they believe it's possible to cure, prevent, or manage all disease. Leon Cooperman continues to fight SEC charges. In a conference call a few moments ago, he says he will fight these charges and that the facts don't support the government's charges. And that is the Bloomberg Business Flash. Joe?
What do you miss? Investing in women's economic empowerment is intrinsic to achieving a country's success. And Japan is learning that now, according to a Kyoto News survey reported in the Japan Times. Japanese women today occupy only 9% of managerial positions in private sector firms, even though they account for more than 40% of employees. Tina Fordham, chief global political analyst at Citi, is still with us. She's in New York to speak at the first ever high-level panel on women's economic empowerment at the UN. That's what brings you to town. So what is the main message, and what do governments have to do on this front to continue making progress on this huge potential, this huge part of the economy?
Well, getting more women into the economy is a huge driver of a country's growth. We also know that a more diverse workforce and management structures are good for companies. So as a member of this first ever UN high-level panel on women's economic empowerment, I think the message is actually pretty simple, that removing barriers to entry for women in the labor force, dealing with issues like unpaid care work, and other aspects of women participating in the economy, like access to banking, is not just the right thing to do, it's the smart thing to do.
Which cultures are deficient? I mean, we talk about Japan. I feel like Europe has been there longer than the U.S. Which cultures are doing the best?
The U.S. is not doing that well, for example. In fact, Japan exceeded the U.S. Rate of labor force participation last year. The U.S. is one of the worst performers in the OECD when it comes to things like paid maternity leave and child care provision, which are the kinds of byproducts that help women get into work. So I always like to raise this to a U.S. audience that imagines that we're advanced in everything. It's always the same answer in terms of who does the best. It's the Nordic and the Scandinavian countries. But even there, where they've got excellent, high-quality government-subsidized childcare, when you look at women on boards and management positions, they're still stagnating. This panel focuses
at a low level, at
yes,
30% or so.
We wish 30%.
Okay.
Less than 20%. Yes, less than 20%, and that's with all of the drivers and the policy levers in place. One of the things we need is men to get involved, and so Abe and his involvement with Womenomics as part of Abenomics is really important. He's taking the lead, as is Justin Trudeau and President Obama in his comments about how he's a feminist.
You mentioned Shinzo Abe and the other leaders of the countries like Canada and the U.S. Can the public sector lead the private sector in helping women gain advanced positions in companies and management?
Well, I think the private sector has to help itself. More than we are already doing. There's a lot of talk, for example, about pipelines. But getting back to the panel and our work, it's going to be coordination. So in the event we're hosting tonight with members of the high-level panel, including me, Christine Lagarde, the head of UN Women, we are going to issue a call to action for members of the private sector individually or at the company level to join the women's empowerment principles, to join he for she, and the many other ways that we can come together to accelerate this.
How much of these issues come down to laws and regulations, and how much is cultural willingness to accept those laws? So, for example, something like paid time off or leave, if people don't take them, or if men don't take them because they're still seen as you shouldn't do that, or that's going to diminish your career track, then that could set back what the law. How much does that set back the law's intent?
Well, one of the things that was said last night at the UN He for She reception at MoMA, where Shinzo Abe was that this isn't the movement to reduce gender inequality isn't just pro-women; it's a liberation movement for men. So I quite like getting that message across. This should benefit both men and women in time with their families and in more economic prospects, which feeds into better outcomes for children and families and everything else. There's a real multiplier effect. Culture and laws, well, I mean, chicken and egg, what comes first? The World Bank has identified that a majority of countries have some number of laws on the books that either restrict women from inheriting property, owning title, opening a bank account, etc. But, culture is part of that. The G20 member states, though, are getting involved with a W20, which is going to require them to agree to targets on this. It's expensive to maintain these policies.
But the payoff is hopefully much bigger than the investment in the end. Tina, thank you so much for your time. Really appreciate it. Tina Fordham, Citigroup Chief Global Political Analyst. Scarlet?
Coming up, Trump economic advisor Peter Navarro weighs in on the unauthorized account scandal at Wells Fargo. This is Bloomberg.
The Senate Banking Committee grilled Wells Fargo CEO John Stumpf yesterday in Washington over the creation of 2 million unauthorized customer accounts. Members in the committee are demanding Wells Fargo claw back pay from the executive in charge of the unit, but that may be harder than it looks. Bloomberg's Kevin Cirilli sat down with Trump economic advisor Peter Navarro, who weighed in on Wells Fargo.
This is just a stupid behavior on Wells Fargo's part. You can't make up a regulation to cure that kind of stupidity. You really can't.
But do you
they're going to pay a heavy price, as they should, reputationally.
There's been some widespread confusion, and I'm hoping that you right now can clear that up for us. Will the 15% tax reduction rate of the corporate tax plan that Trump is proposing, will that apply to small businesses? Yes or no?
Yes, it applies to small and large businesses, and there will be no gaming of it. It's pretty clear on the website.
Including pass-through companies.
Didn't say that. I said small and large businesses.
But can you say that now?
Go to the website. Okay?
It doesn't say that on the website.
Go to the website. Now, what you're talking about, it may be important, but when you score the plan, it's a small difference over a big picture. Now, what we're going to do is, with the tax cuts, we're going to lose about $2.6 trillion in taxes over the 10-year budget window. by having a really stimulative tax cut. But when we score energy, trade, and regulation in the Trump plan by unleashing the economy, we get back that money and we move forward in a rapid growth model at 3.5%, and this country booms.
But this issue of small businesses, small business leaders that I speak with in Washington as well as all over the country have really pressed the Trump campaign on this. You got the endorsement of a huge small business organization.
You can keep asking me that till the cows come home.
But
I'm going to tell you the same thing.
it?
I told you that small and large businesses get the tax cut. Go look at the complexity on the website.
But no answer on the pass-throughs. All right, moving on to the Federal Reserve. The folks on Wall Street, the folks in the regulatory sphere, they look at Donald Trump's rhetoric on the Fed and they see it as too bombastic. Is it problematic if he's in the office?
No,
will it create more financial uncertainty?
No, what's going to happen is we're going to have certainty because we're going to have growth. That's what everybody in this country wants. That's what everybody in the international markets is on. They want the American economy to go from 2% to 3.5% real, and you'll have a real Trump bull market, not a paper bull Obama market.
That was Bloomberg's Kevin Cirilli with Trump economic advisor Peter Navarro.
Coming up, what you need to know to gear up for tomorrow's trading day. This is Bloomberg. On this Fed and BOJ day, we had stocks rise, bonds rise, oil rise, the dollar declined. But of course, we have to look ahead to tomorrow, and I'm focusing on the EU trade ministers. They begin a two-day meeting in Bratislava to discuss the EU-Canada deal. You know, trade deals not so much in vogue these days.
No. 8:30 a.m. tomorrow, I'll be looking at U.S. initial jobless claims as I do every Thursday. One of the most rock-solid labor indicators you can find. It just does not seem to go up. We'll see if that trend continues to
around the lowest since 1973, if I'm not mistaken. Don't miss this. U.S. existing home sales tomorrow at 10 a.m. The housing market has been a little bit soft. Pay attention to what most likely is your biggest asset.
All right, that's all for What You Missed. Thank you for watching.
We'll see you back here tomorrow.
Have a great evening. This is Bloomberg.
When it comes to Medicare, everyone...
I'm John Heilman.
And I'm Mark Halpern. With all due respect to Donald Trump's mimicry, we're getting the impression you're a one-trick pony.
Jeb Bush, here's Jeb Bush. Donald Trump is not a true conservative. Charles Krauthammer. Donald Trump is not at 50%. Poor Mitt Romney. Donald Trump shouldn't run. Conservative eggheads. Donald Trump. A couple of papers. Donald Trump. Glenn Beck. Donald Trump. Ted Cruz. Donald Trump. Lindsey Graham. Donald Trump's strategy doesn't work. The Washington Post. Donald Trump wants to let Japan go nuclear. Donald Trump doesn't like NATO. Donald Trump will never run.
Well, I don't know if Trump is going to win.
He won't do well. He doesn't know foreign policy. He shouldn't be allowed on the debate stage. Donald Trump isn't Christian. Tim Kaine. Donald's this, he's that. There's lightweight Rubio. Trump's a conman. Trump's a conman. Hillary Clinton. Donald Trump. Donald Trump. Donald Trump. Donald Trump. Donald Trump. Donald Trump. Donald Trump will not become the president.
On the show tonight, a Clinton speech on economic inclusion and our new poll of high-income voters. But first, we're going to start the program with yet another police shooting that has captured the nation's attention. Protests erupted yesterday in Charlotte, North Carolina, after police shot and killed 43-year-old Keith Lamont Scott. Police say Scott emerged from his vehicle with a gun before he was killed. Scott's family has disputed the police accounts, claiming he was unarmed. After all that, demonstrations turned violent last night as protesters vandalized businesses, threw rocks at police, and at one point, they blocked a highway by looting a truck and setting fire to a pile of boxes. All of this happened, of course, a day after police in Tulsa, Oklahoma released that video showing an officer shooting an unarmed African-American man, Terrence Crutcher, who appeared to have his hands in the air when he was shot. While campaigning today at a church in Ohio, Donald Trump was asked about that Tulsa footage.
To me, it looked like he did everything you're supposed to do. And he looked like a really good man. And maybe I'm a little clouded because I saw his family talking about him after the fact. So you get a little bit, different image maybe. But to me, he looked like somebody that was doing what they were asking him to do. And this young officer, I don't know what she was thinking. I don't know what she was thinking. But I'm very, very troubled by that. I'm very, very troubled by that. And we have to be very careful. So, these things are terrible. That was, in my opinion, that was a terrible situation. And we've seen others. And the police are aware of that, too. By the way, the police are troubled by it, too. They look at it. Now, did she get scared? Was she choking? What happened? But maybe people like that, people that choke, people that do that, maybe they can't be doing what they're doing.
Hillary Clinton also commented on the latest shootings. She took a moment during her speech today here in Orlando to address the matter as well.
There is still much we don't know about what happened in both incidents, but we do know that we have 2 more names to add to a list of African Americans killed by police officers in these encounters. It's unbearable, and it needs to become intolerable. I've spoken to many police chiefs and other law enforcement leaders who are as deeply concerned as I am and deeply committed as I am to reform.